What are the tax benefits under mutual fund schemes? You need to know the following things to get a good understanding of income tax benefits in mutual funds. 1. Section 80C benefits. 2. Dividend payout tax. 3. Capital gain tax. 4. TDS, tax deducted at source. 1. Section 80C benefits. Effective the 1st of April 2020, Section 80C benefits will be available only on the old tax system. They are not available on the new tax system. ELSS, Equity Linked Savings Scheme, provides tax benefits under Section 80C of the Income Tax Act. Under ELSS scheme, investment up to 1.5 lakh rupees in a financial year will qualify for tax deduction under Section 80C. 2. Dividend tax. In the past, for an investor, the dividend received from a mutual funds company was completely tax-free. But, for the mutual funds company, the dividends declared were taxed and it was known as Dividend Distribution Tax, DDT. The DDT rate was 10% for equity funds and 28.84% for debt funds. The mutual funds company was responsible for paying DDT to the Government of India. The NAV of the funds came down to the extent of DDT deducted. Effective the 1st of April 2020, DDT was removed. It means the mutual funds company won't deduct DDT while paying dividends, but the dividend will be taxable for the investor as per their income tax slab. 3. Capital gain tax, CGT. The profit that you get when you sell mutual fund units is known as capital gains, and the tax applied on these gains is known as capital gains tax. Capital gain tax is divided into two parts: A. Short-term capital gain tax, B. Long-term capital gain tax. Capital gain tax depends on type of mutual fund, equity or non-equity, and investment period. Equity funds short-term capital gain tax. If you invest in equity funds for less than 1 year and make profits, then it is known as short-term capital gain. The tax rate is 15% and hence you have to pay 15% tax on your profits. Equity funds long-term capital gains tax. If you invest in equity funds for more than 1 year and make profits, then it is known as long-term capital gain. From the 1st of April 2018 onwards, there is no tax on profits up to 1 lakh. After that, any profit is taxed at 10%. Non-equity funds short-term capital gain tax. If you invest in non-equity funds for less than 3 years and make profits, then it is known as short-term capital gain. The profits will be added to your income under income from capital gains, and you have to pay tax as per your income tax slabs. Non-equity funds long-term capital gain tax. If you invest in non-equity funds for more than 3 years and make profits, then it is known as long-term capital gain. The tax rate is 20% with indexation, and hence you have to pay 20% tax on your profits. 4. TDS, tax deducted at source. Effective the 1st of April 2020, there will be TDS on dividends paid to the investors. If the dividend to be paid is more than 5,000 rupees, then the mutual funds company will deduct 10% of the dividend amount as TDS. If excess TDS has been deducted, then you can claim it back at the time of filing your income tax returns. Thanks for watching.